Exactly. So it should be, with all the economic data this week, it makes for a very interesting week, right?
It's been data overload, so we'll get a bunch of Fed speakers next week that tell us what it means. But for now, it's over and done with, so hopefully some smooth conditions ahead.
Exactly, exactly. So, Michael, for those who don't know you, tell us a little bit about you yourself and DTR trading, and give us the Michael story.
Yeah, so I've been trading for about 10 years now. It'll be 10 years or 11 years, sorry, in November. Spent most of my career doing trade execution for a pretty big hedge fund, kind of off the shore of England and France in a place called Guernsey. So I worked there for about 5 years and then got kicked out of the UK for Brexit and have been sort of trading my own capital ever since. DTR trading kind of started during the pandemic when I got on Twitter, kind of bored out of my mind. And I was just shocked with the quality of education that was available to people where everything was averaged down and buy every dip and there was no real structure to things. So I thought I could do things a little bit better. And so what I do is I work with traders to kind of help them overcome some of their psychological issues and the risk management pain points and just really focus on that sort of mentorship and coaching side of things. For myself
Awesome.
personally, I trade large caps, so momentum strategies with sort of the mega cap names, and that's sort of where I found my niche.
Cool, cool, very cool. And we'll get into a little bit more detail on that as we kind of go through. But let's go back to the England and France. How did you end up there? You're from
Yeah,
Canada
so
originally, right?
I am, yeah. So I'm actually based in Canada now, but both my parents are Polish immigrants. So I had
Okay.
the opportunity to go to the school in the UK or anywhere in Europe for basically the same price as a European. And so instead of taking a gap year and traveling, I kind of convinced my parents that, hey, I should go do this, and I can kind of get two birds killed at once here with one stone, sort of thing. And so that was what I did, and went to a pretty good school out there, got into a law degree, knew pretty much right away that I wasn't going to be a lawyer, and had sort of my first midlife crisis at 19 trying to figure out
Nice.
what I was going to do next.
Nice. A lot of former lawyers, traders who are former lawyers and professionals. A lot of engineers. So that
Yeah,
definitely fits the bill. Analytical minds. So you joined up with a firm and you were doing clearing for them, market making. What exactly were you
I
doing for
did
them?
trade execution. So we
Okay.
had a bunch of algos that are generating signals for us, telling us prices. Oh, you want to buy Apple this amount. And my job was to enter that position with as minimal slippage as possible and under the price that was suggested. So really, it was about kind of remaining as anonymous as you possibly could in the market and kind of ensuring that we were staying within sort of our own risk parameters that were sort of firm created.
Got it. Got it. And what do you think that led to as far as foundational trading for you? What did you take away from that experience?
Yeah, so I think the biggest thing for me was that there was a whole team that was supporting everything I did. So from a retail perspective, I don't think you maybe understand how there's one trader in a firm that's supported by five other staff members. And so when I became a retail trader, I had to basically try to replicate all those decisions. And so that for me was, I think, a really big starting point where I built out from like a risk management side of things, because that was what was really hammered into me, where if I was sloppy with my risk management or I was a little bit lazy with it, I'd either get pulled off the desk or I'd be getting the pink slip and getting sent home. And so just kind of understanding that losing well and learning how to lose in control is more important than anything else was probably the biggest foundational piece I took from it.
That
And
that
then
that
obviously there's
that's awesome.
strategy things, there's yeah, yeah, technical
Yeah.
side of stuff, right? You learn the strategies of the firm and you kind of start to influence your sort of decision making as a retail trader based on what you know then. But I would say risk management was the most important thing to kind of take from it.
Yeah, absolutely. And I come from a firm too, and that's what I usually tell people when people kind of start their journey. I say trading community is so important, whether it's online, whether it's physical, in your case, a firm. I can't tell you how many times I've had a trading idea, what you would call risk management, and everybody behind me was like, "No, that's a bad idea," and they saved my
Yeah,
hide. So it's something that kind of goes untalked about, and but Twitter Spaces is kind of becoming that, online forums, Discord's becoming that, but there's really no replacement for having that, particularly in the early stages of trading, where somebody could kind of pull you out of hot water and
yeah.
that's mentorship at its finest.
That like hyper focused peer pressure can actually be incredibly
Right.
profitable for you when you
Yeah.
find yourself in the right community. Now, if you're in a group of 25,000 other traders and one person's
Right.
trading dollar CAD and one person's trading Bitcoin and the other person's just averaging into everything, you're probably not going to learn too much. But if
Right.
you're
Exactly.
finding kind of your tribe or your clan, then there's a ton of success to be kind of gained there.
Absolutely. No. Now, once you left the firm and you came back to Canada, did you become a retail trader right away, or did you try to go back into the business?
Yeah, so I actually looked for a few jobs on Wall Street. My objective was to try to find a job in the States, and then Brexit happened. Sorry, COVID happened, And so I was like, all right, like my non-compete, I still have a few months left. So let's see if I can make this retail thing work. And COVID was a pretty nice time to kind of get started again and build some
Yeah, it sure
momentum
was. A
because
lot
it
of trading
was,
interest. I mean,
yeah,
trading just exploded during COVID for sure. A lot of people washed out
exactly.
since then,
So
but the people who were able to make it, they're still doing it. So that was
yeah.
a great way for people. A lot of people to segue into trading. Now, how did you go ahead and I know like you said you had to kind of mimic 5 different positions that you previously had at the firm. You had to do it all by yourself. How did you? What was the journey there? Was it journaling? Was it mentorship? Like, how did you physically do that where you replaced all of that team, that camaraderie, that mentorship?
Honestly, I got slapped in the face a few too many times. So early on when I was starting, I had a few like really crazy boom months, and I was making some crazy numbers, and then I gave it all back in like 3 days. And
Sure.
so I kind of had that like fight or flight moment where I was, okay, I'm either going to get serious about this and kind of get serious about keeping my capital, or I'm gonna have to go back and tail between my legs and go back to my old firm or try to find another job and have this like gap in my resume. I'm not quite sure how to explain all of a sudden.
Right.
So
Trading. I was
yeah,
trading on the gap.
it'll, let's see your P&L statements, and
Right,
those
exactly.
will end the interviews pretty quick, right? So once that kind of became established, then it was a lot of journaling, a lot of watching back my trades, and just kind of forcing myself to find ways to keep myself accountable. A lot of that for me was trying to gamify that process. So if I could say, if I expected to lose $1,000 on a trade and I lost 850 bucks, then that was a positive expectation to kind of a losing outcome. And so, kind of trusting the process and trying to gamify that process as much as possible was kind of a cheat code I found at the time.
Cool. That's very cool. Yeah, I like that outlook. So if I was expected to lose 1,000, I only lost 850. I'm doing better than my expectations. So that's a
Yeah,
interesting spin on a negative outcome. I like that.
because
That
like I
you
can do the right thing and still be wrong. Like my
right.
process can be perfect, I can still lose money, and I have to be okay with that to a certain extent if I want to survive the ups and downs. So the way I can do
That
that
must be
is to
something
judge my process.
that you I mean learning the process, all right? We always talk about that's the most important. That's way more important than your outcome, right? Being able
Yeah.
to take the emotions out of that process. Is that something you picked up from the firm, like trading on the floor, or is that something you had to develop as an individual as well?
So I think it's definitely a combination of the two. So working for a fund, you have a pretty structured way of how you're going to do things. And so I was trying to replicate that again, right? But now I can kind of crawl out of bed. I don't have to spend 6 hours doing prep. I can do a few other things in between. So kind of adapting that routine was a big part of it. But then also realizing, hey, this works for me, that doesn't work for me. A lot of kind of fail testing, just kind of doing A/B testing, even if you want to call it that. If I wake up at 6 or if I wake up at 5:30, do I have a significant difference in my performance? If I'm drinking coffee at this time, is it better? Like it's a little habits, and then I'm one of those
Are
people
you
that really
journaling
thrives in
all of
routine.
those incidentals?
So I'll look at it to a certain extent. So like if I'm having like a trade where my note says I'm got way more anxiety than I anticipated, I'm trying to then think back, okay, when was my last coffee during the day? Did I have it 20 minutes before the trade? Was that my fourth coffee of the day? Am I like overcoming my caffeine allotment? Like I'm trying to solve problems before they compound into trading problems. And
Right,
the more I
right.
can kind of get that like first spot where I get stuck on something, then the less likely I'm ever to make a mistake further on in sort of the path.
That's great. Most people, and this goes for all walks of life, they don't want to put in that type of work, right? That's hard. Look, when did I have my last coffee? When did I wake up? Compared to yesterday, tracking all of these things, how big of an impact do you think that work makes in your overall outcome?
I think just the accountability, right? Being accountable to yourself and understanding, okay, I can lie on social media, I can lie to my partner, I can lie to my friends about how well I'm doing. But if I'm lying to myself, then I'm never going to get to where I want to be. So just adopting that accountability mindset, or that sort of like, I need to hold myself to a higher standard mindset, I think has been a key to my trading success, or being able to find that consistency, because I've kind of agreed with myself or made a deal with myself that I'm responsible for my success. No other element is. And so if I'm willing to make that deal, then I'm willing to look at every other example. And yes, it's a little bit of work, but I also work like 3 hours a day now versus working 18 hours a day. So the amount of work is maybe less, but the intensity is greater. And
Hmm.
the payoff for that intensity is way greater than answering an email or doing an analyst report on some boring bank you don't care about. Like this is a lot more fun.
Right. Absolutely. Absolutely. So tell us a little bit about your daily routine. So I mean, I know it's changed. It's probably changed dramatically over the years, but it's wake up, eat, work out. Give us a little a glimpse into DTR Trading's life.
Yeah, so for myself, I wake up pretty early, usually between 5:30 and 6. And the first thing I do is take the dog out for a walk. So we try to do 45 minutes generally in the morning, kind of get the blood flowing. And then it's water, coffee, hygiene for the next little bit. Generally, I like to trade fasted. So I usually have my first meal of the day around 1 or 2 o'clock in the afternoon. And then usually once I eat, I'll have a little bit of a break and then go exercise once the market's closed. For myself, the main thing that doesn't change is when I start to sit down and look at the markets. So I'm usually at my desk around 8:30 in the morning, and that's kind of when I start to do my prep. It's usually about an hour or so of prep in the morning for 3 hours of trading. So if I can kind of get that good hour prep in and I have a good plan, then that 3 hours goes by really smoothly and usually without too many hiccups. The stream starts around 9 a.m. every morning, and then I'm live streaming from 9 to 11, 9 to 11:30, and kind of just making sure if I can get a morning breakout trade. And that's sort of the niche I found myself in. So it's try to get moving, try to be awake by the time I start doing my prep, probably a few too many coffees even still. And then, yeah, get going with the market, see what's going on.
Awesome. Awesome. And where are you trading within a Discord room or you have a proprietary platform?
Yeah, so I stream everything on YouTube,
Okay.
but I run that through like a Discord. So post a link on Discord, post a link on
Awesome.
my website. That's
Awesome.
generally how I do things.
Cool. And you've got these are from your mentorship or this is just general? Anybody could access it.
Yeah, these are just traders that I'm working with on an individual basis. So I generally work with like 5 to 10 traders at a time and kind of provide a more kind of one-on-one sort of mentorship opportunity where we go over people's trades, we go over their risk management, we kind of make individual plans on how to overcome some of their pain points. I found the big Discord model maybe is very lucrative, but it
Mhm.
felt disingenuous for sort of what I did as a trader. And so this is sort of the way I can kind of give back. And ultimately, live streaming is like a way of keeping myself accountable to a
Yeah,
certain
it sure
extent,
is. Right.
where if
You have
people
receipts.
know what I'm doing and they know what my strategy is, exactly. Yeah. So that is a really big perk. And then being able to watch back my trades has actually been a really nice addition to sort of my review process as well.
Nice. Then, did you play sports in high school and college?
Yeah, I did. So I played soccer in the UK. I was a goalkeeper, and then I played every sport you could imagine
Awesome.
growing up as a
So
kid.
game tape. So
Usually
you
as a
watch back your
goalie. Yeah.
trades.
Yeah,
That's cool.
exactly.
That's
Yeah.
great.
Like
That's great. Now I know a
one
lot of
thing I
people
love to
do,
say, right, is
market replay, but I don't really hear too many people watching back their trades, which that's an interesting take on it. So
yeah.
you watch it back and you say, "Oh, listen, I could have done this better. Why? How didn't I see this? Why did I do that? Or how? What's the analysis look like?"
Yeah, so pretty much exactly that. I have my kind of comments that I'm mentioning about inside in the moment, and then I have the power of hindsight when I'm watching it back to kind of know what happened. And so I can start to notice when I make rush decisions or I miss like a criteria that I'm looking for. So that's the main element. Okay, make sure that I followed my rules sort of the way I expected or sort of the structure I expected. And then once my technique is consistent, once I'm dropping back in the pocket 7 steps every time on a deep throw, then I know, okay, my release point should be here. I should be doing X, Y, Z. So it's making sure that my technique is consistent so I can notice the areas where I'm consistently making mistakes. And then, okay, with the power of hindsight, knowing, okay, if I adjust this or if I adjust that, then I should have that opportunity. A lot of the times, what you get inside your stream, or what I see a lot of time in my stream, is there's like a void of self doubt or voice of self doubt that comes in way easier than it should. And so noticing those patterns and hearing back that sort of like irrational thinking has actually made me notice some of those like psychological triggers a lot easier. And that's made me trust my thesis more often. That's made me want to get more follow through. It's allowed me to have more structure in sort of, oh, I know this is a trick that kind of comes up every now and then. So I know how to avoid this now. And so it just makes me more aware of what I'm trying to do. And I try to do kind of stream of consciousness on the stream. And so it's almost like I'm hearing that devil and angel on my shoulder when I watch things back. And that has kind of created a lot of nice confirmation bias that, hey, I actually know what I'm doing. And that when I do follow my rules, I'm actually pretty successful at this. So it's a nice like reward structure as well when it all kind of
That's
comes
awesome.
together.
It's like a super journal. It's like journaling
Yeah.
your trades, but in like wow, that's really great. I don't maybe I've run across it from time to time. There's a lot of people who live stream, but I never chatted with anybody who is using it as a tool for their personal analysis, because self-awareness is so important. So you could just watch that back and you know exactly what you were thinking sentiment wise, you know what you're thinking, attitude wise. You could probably hear it, like you said, in your voice. So I had a little too much coffee. So you could compare that to your written journal, your physical journal,
Yeah.
and see really where things align. Because we're always talking about do more of what works and less of what doesn't work, and that's a great way to kind of spot and highlight the doesn't work so well.
Yeah, I'm a big believer that profitable traders rely on facts, not feelings.
Yeah.
And
Oh yeah. Absolutely.
oftentimes, what I feel in a trade is different than the facts of the trade. And the second I have money on, the second I have risk on, my feelings have like biases and they got swings and they're all over the place when I'm maybe not a very emotional person to begin with. But once I got risk on, then oh my gosh, I'm an absolute
Yeah. It gets
nightmare
the best of
sometimes.
everybody.
Yeah,
That's
so
that's the hardest
it's
part.
noticing those patterns. And again, just like that accountability step, right? Is this is a way of how I can do it for myself. And then this isn't too different than what I experienced with the fund. So a lot of our executions, there'd be like a 30-second screen record before and a 30-second screen record after. And so we'd have to explain them with sort of the evidence in front of our face.
Oh, that's
So
great.
this is kind of my version of that for myself.
Cool. Very cool. So tell me a little bit about from when you went, because I'm sure like when you first started, or maybe you didn't, but you tell me. You went from being a new trader on your own. Were you profitable immediately? What did your profit curve look like? And I imagine now you're profitable. Tell me that journey.
Yeah, so pretty much right when I went back to retail trading or kind of went on that path, I was pretty much green right away.
Awesome.
I hit the ground running, but then like I said, I gave back pretty much everything within 3 months later. I gave back like 75, 80% of my P&L that I'd made up. And I was just barely making enough to like pay for rent the next month. And so I kind of had that, call it come to Jesus moment. After that sort of initial 3 month period, it was a little bit of 1 month up, 1 month down, 1 month
Sure.
up, 1 month down, until I kind of figured out exactly some of the technical things I needed to fix. But since then, it's been mostly I want to say straight line up, but there's been more green months than red months. The COVID pandemic specifically was a really significant period for myself. Was able to do some things with a family account that was really like incredible. And then since then, it's been, 2023 has definitely been a slower year, but I don't think I've had a red month yet, and so
Awesome.
pretty happy with how things have gone so
Awesome.
far.
So just becoming more consistent over time, refining those rules, getting better and better. Tell me a little bit about your kind of your risk profile. Are what's your R look like? What is your percentage gain, your percentage loss? Give me a little bit of your philosophy on that.
Yeah, so generally, I try like to be risking less than a dollar per share when I'm entering a trade. The less than that, the better. So anything less than a dollar per share, sort of my max position size. That should mean I lose no more than 1% of my account after my stop loss. So I'm generally working backwards from that structure. My best case scenario is once I get into that dollar zone, I kind of get like an overreaction flush, or kind of like a fake out move inside that range where I can get a 37-cent stop loss or a 50-cent stop loss. And so that's kind of how I'm trying to gamify it a little bit, gamify
So
my
you're looking for
entries.
1R?
Generally targeting a move 2R away, but I
Okay.
scale out on the way up. So I
Got
want
it.
2 to 1 risk reward to sort of justify my entry. And then once I'm up 1R, once I'm up 50 cents, a dollar, whatever it is on my risk,
Lock some of that in.
then I'm scaling out and I'm getting to risk free. So generally that's sort of my move. I risk out or scale out to 25 to 30% of my position, just sort of depending on how many contracts or shares I have or how many lots. And then, just try to keep pushing that stop loss up, keep taking profit on the way up. And then on a kind of like average basis, I'm making about $1.70 for every dollar that I risk, give or take. And so I just keep that kind of going and try to keep scaling that and take 3 to 4 trades a week, sometimes 6 or 7. But I'm more of a big believer in a less is more type trading environment.
Got it. Got it. And are you holding these overnight, intraday? What's your typical timeline?
Yeah, so I'm a pure day trader. Like I'll hold
Okay.
positions for an hour, hour and a half, but I'm looking for morning momentum breakout plays. So I'm looking for a 1 to 2% move within sort of the first 90 minutes of the day from sort of my entry zone. And that can be 20 minutes, 15 minutes, 5 minutes sometimes. So I consider myself like a scalper mindset, but kind of a swing trader patience.
Cool. Cool. So let me ask you this from your experience with students. I know for me, talking to many traders over the years, if I could just drill into them, 1% risk per trade, don't overtrade. one to two max risk reward and scale out on the way up. Like that would solve almost everybody's problems. But the hardest part is getting them to
Yeah.
adhere to those rules. It's an extraordinarily sound, extraordinarily achievable trading plan. When you chat with students, you tell them that. I mean, it's such a simple concept. How do you teach them that? How do you get them to adhere to those guidelines?
Yeah, I think a lot of traders start with kind of impulsive trading habits. So they're scaling out when the P&L feels big enough or when the P&L hurts too much. And so there's no consistency in their technique. So there's no consistency in their outcome. The reason I'm so confident in my rules work is because I've done them 10,000 times.
Right.
I've kind of turned them into a muscle memory. So there is no shortcut to adapting it, but it is way easier than you think. It's just your brain's tricking you into thinking that this is some super difficult structure to do. Like I mentioned, one of my big elements, one of my big factors I like to do is really consistent in sort of my setup trigger and how I scale out and sort of how I'm assessing what that next opportunity is. And so if I'm really consistent, I do the same thing 10 times. If it doesn't work, I'll know what I need to fix. And so if you make your technique more consistent, you kind of do that, then you can at least learn from your mistakes or you can learn from your process. I think a lot of traders are a little bit too impulsive in how they're making their decisions. And so they slow down their learning curve. So really the way of kind of working with traders through that is forcing them to take one trade a day, journal everything, right? Kind of track some of their patterns and identify what they're good at. And then once they're there, use that sort of like positive confirmation to help reinforce some of the new habits that have gotten them to that point. But it is, I think, the hardest battle for traders is to go from kind of being an impulsive decision maker to being a really methodical decision maker and letting trades come to you and almost like accepting that mindset of I'm going to let price give me a bigger discount than I expect versus chasing an entry or chasing a setup. And just kind of getting that switch flipped is a little bit of a different thing for everyone.
Yeah, absolutely. And now let's go to mechanically. What do your setups look like? Are you price action, support and resistance? What's the actual on the chart?
Yeah, so I'm a big believer. I love Bollinger Bands, especially for like big gap up and big gap down days. So like reversion to the mean strategies. And then I'm usually looking for level breakout. So support and resistance traders, where I'm looking breakout through daily highs and lows, weekly highs and lows, monthly highs and lows. And then I'm using candlesticks and volume to basically give me confirmation of strength at those breakouts. So if I'm seeing a mean reversion strategy, I should see a reversal candle on reversal volume. If I'm seeing a breakout, I should see a breakout candle on breakout volume. And then looking for pullbacks before I basically get a breakout again or before I get that next move to justify that risk reward. So it's a keep it simple, stupid type
Hmm.
principle where I'm just trying to keep things as consistent as possible. And yeah, I'm looking for momentum strategies, momentum breakouts, momentum reversals, trend reversals with momentum. So really volume and candlesticks are how I try to quantify that as best as
Cool.
possible.
Awesome. And then that goes to your daily setup. In the morning, you're going to be pulling up charts. You're going to be marking them up, looking for your support and resistance, throwing your Bollinger on there, seeing where they're coming up to the channel, and then making decisions based on that. And what's the max amount of charts you're looking at a time?
So I look through 8 tickers on a day-to-day basis. I've basically
Okay.
been trading these for the last 5 years or so. And it's the indexes, so SPY, QQQ, or NQ, SPX, and then Apple, Tesla, Microsoft, AMD, NVIDIA, Meta, Amazon. That's pretty much
Got it.
my
To keep it
crew. And
simple,
so,
too many people are looking
yeah,
at too many stocks. They're looking
yeah.
at way too many items, and it becomes cloudy. You
I
have
mean,
eight
even
tickers.
you know from your institutional days, right? Like there's no trader on the desk that has a scanner that's like looking for the new small cap that's the hot of the day or
Right.
whatever. They get assigned a sector, they get assigned a basket of names, and they're expected to become kind of an expert in
Yeah.
that. And then same thing, right? Try to bring that sort of to my own personal trading. And then people always talk about like trusting your gut or training your gut. Well, you're never going to train your gut if you're trading a different ticker every single day or a
Right.
different setup. You need to kind of understand the personality of these stocks.
Yeah, absolutely. There's a lot of repeatable patterns in those. So once you're able
Yeah.
to identify those, makes things a lot easier. Now, when you take on a new student, do you give them the list of tickers, or do you have students all across the board? You have forex students. They're trading mid caps, small caps, or do you say, hey, listen, I want you to focus on these?
Yeah. So my objective here is for education. If you try to follow my trades, you maybe make a little bit of money here and there, but you're always going to be behind. And so the objective is for traders to maximize what they're good at. What I'm good at as a trader is maybe different than what you're good at.
Sure.
And so I think there's just fundamental principles of what traders need to improve or create structures on how they can actually learn from their mistakes. And so that for me is the more valuable thing to focus on traders with. Now, if someone is coming from an environment where they're trading hundreds of different tickers and hundreds of different setups, then I generally recommend them to filter it down to 5 or 6 names that they have a lot of success with. But how I trade is not sure that it's not the only way to trade. But how I manage risk, I think, and how I wait for trades to come to sort of my entry price. I think if people could apply those techniques, their own kind of standards or their own sort of strategies, then they'd probably find a lot more success in their trading in general.
Awesome. Awesome. So it sounds like you have a very comprehensive program to put them through and, get rid of the bad, do more of the good. And I know you, I kind of want to jump away from that for a second here. I know you've had some broadcasting experience. You've been on some podcasts and hosted some podcasts. Share with us a little bit about that. How'd you kind of get involved, and what have you done outside of trading to kind of help with trading education in the community?
Yeah, so great question. Honestly, I just try to be active on social media as much as possible. And it's such a fantastic resource where there's so many talented traders, so many talented creators, and they want to just hear genuine stories. And so you interact with the right people, you send a few DMs, right? You kind of have a little bit of banter back and forth, and all of a sudden you're getting invited onto a podcast or you're getting asked to do some technical analysis for someone. And so you create that. I think social media is a much more enjoyable place when we look at everyone as a collaborator, not a competitor, and you're going to level up your sort of skill set. You're going to learn a lot from people that way. And so traders that I respect, traders that I am confident aren't just posting Webull P&L screenshots and are hindsight traders. Those are the people that I can learn a lot from. And so no one ignores a positive DM. Everyone wants to be told how great they are and how inspiring their content is. And so if you can reach out a little bit and ask a educated question, you're always going to get a really nice follow-up. And then you never know where that conversation can go. I've made a few podcast appearances on the Penny Lane podcast. That was a lot of fun when it was kind of ripping and roaring. And a few other little shows here and there, like Dale Hunter with part of an FX group. So I've been a few shows there, but it's, people want to speak, they want to ask questions. I'm always happy to talk trading. It saves my other friends and sort of my girlfriend and stuff like that, the hassle of having to hear about the markets today.
Of course. It's hard trading shop with non-traders. They get lost in the minutia. Yeah, that's awesome. So let's jump over for a moment to prop trading, because I know you're a big prop proponent. You've done a lot of work with Surge, both yourself and your students. Tell us about your journey from trading your own account into discovery of prop and what that looked like.
Yeah, so actually my first job trading ever was trading prop. And I worked on a physical desk in London where I had to pay an audition fee to get capital, and then I had to pay a monthly desk fee to keep trading. And so I did that
like
while
old school prop, like on the desk in office.
Exactly. Yeah. So that was sort of my first exposure. So I was doing that while I was still a student. And that's kind of how I got introduced to the world. When I came back to trading retail and kind of seeing what was out there, I started to notice like a really similar pattern with a lot of traders, or I started getting a lot of the same excuse from a lot of different traders of, oh, I've got a small account, so I don't need to think about managing risk, or I've got $1,000, so I'm going to try to take this to 100,000.
I'm going to flip it. I'm just going to flip it for 50% every trade.
Exactly. Right. And so I think what prop does is it gets people to be able to hit their kind of financial expectations while having less downside risk. It just increases their probability of becoming successful, right? If you learn to trade within this sort of risk management rule, that's sort of gamified already for you, and you can get access to capital that you don't have with $1,000 account. And so if you can combine both of those things together, then I think it's ultimately a big win for the retail trader. Now, it's not perfect. Not like, there aren't risks associated with it. Not everyone passed their evaluation on their first attempt, but you're more likely to make $10,000 with a $100,000 account than you are if you have a $10,000 account, even if it takes you 3 or 4 evaluations to get there in the first place. And so I think that's sort of a way of risk management for traders, especially when you're starting out. It's a really powerful tool that I think more and more people should use. And then having more prop firms available that allow you to have access to the large caps and the mega caps, that then solves even more problems for me on my end, where I can convince people that, hey, you learn things the right way, you create that proof of concept, it's way easier to scale than is if you kind of keep batting your head against the same wall and playing these 0 DTE options, and you're playing this 12-cent contract that you think is going to go 2,000%, and that's what you need to be successful. That path usually ends only in one way. And so, just creating, kind of increasing your probability, I think, is what more traders need to look at it as.
Absolutely. That 0 DTE options path, Though, I found the worst is when it ends positively. Like somebody
Yeah,
takes that
yeah.
trade and they become invincible, and that's the only way they know how to trade now. And it just like it's such a long, hard road to bring them back to something sensible, where I think it's more detrimental than just losing it all the first time. So that for me, like I've seen those outsized wins, and people just the high is like nothing else, and they want to just
Yeah.
trade that way. So, but you can't
You
really do
give it
that
all
in
back.
prop. Yeah, absolutely. And so I'm glad to hear you're a big proponent of prop. What would you say percentage wise your students are? Is it going to be 50-50? The majority of them are trading through prop?
I would say it's about 50-50. Most of the time these days, I'm trying to focus more on getting traders into the prop route, just because I've seen the benefits of it. More and more I work within this sort of space, the more of a believer I am, especially for traders who are coming with accounts smaller than PDT. I think that's where
Sure.
there's a
I
ton of
know that's a
value.
huge one.
Yeah, so if you can get there and you can kind of remove that, I think it's the fastest way to achieving your objectives. Like most traders want to trade because they want freedom, they want to quit their job, they want to maybe get a nicer vacation. And if you can kind of achieve those objectives while risking 10% of what you would have previously, that's a way better kind of risk reward ratio than anything you could get even trading your own capital. So,
Right.
yeah, I keep getting more and more excited about where the space is going. And I think the competition that we're seeing is only going to be beneficial for the space as well.
What do you think it looks like 5-10 years from now?
I think there's going to be a lot more liquidity and probably there's going to be probably a few names with consolidated power. So a few firms that are kind of like the Apples and the Microsofts and the Nvidias of the world, where they have sort of a niche and they're kind of the dominant forces of it. Um, what I'd like to see in 5 years' time is I think the challenges are structured pretty well these days, but I think there's still a little bit of like an old boys club around. Oh, I learned how to trade. I took my $2,500 account into 250,000 in 1988, and so you shouldn't be trading prop because that's never going to get there. I think that's probably not the right way to look at it, and so I think there's just a lot of traders that still have their confirmation bias of, hey, we did things this way, so we should do these things forever. So I'd like to see that. I think from like a personal perspective, I think some of the trading platforms, they could, the user experience on those could be improved. And I'd hope that in 5 years' time, we have stuff that is maybe a little bit more modern looking. I think
Sure.
that would really improve the sort of user experience for a lot of people who are trading prop, or sort of the intimidation factor
Hmm.
of wanting to switch to that. But ultimately, I think the industry is on the right path and it's kind of doing the right things that it needs to do so far. And the more and more stuff that we can kind of get based stateside or in Canada or in the UK, it's going to keep adding to the legitimacy of the business.
Right. Absolutely. All great feedback. Tell me a little bit about how you came across Surge and why, what about Surge in particular was beneficial for your style.
Yeah, so Surge offers all the same names that I trade on a day-to-day basis. So from that perspective, that's pretty rare in the kind of prop community. You get a lot of stuff that's FX focused or Bitcoin focused or crypto focused, but not necessarily the same collection that you can get of kind of individual securities in the U.S. market. So that for me was a huge selling point. But then really just going through a few of the other competitors and seeing what sort of the options were and kind of how some of their programs work, Surge stood out as a pretty clear winner. And the feedback I've gotten from members, the feedback I've gotten from myself, just using my own platform, it's been a smooth process. The customer service is fantastic. You don't ever feel like you're getting cheated, or it doesn't feel too good to be true. And so from that perspective, it feels like a really honest relationship with what you want, I think, in a broker
Awesome.
or in a prop firm.
Yeah, great feedback. Great feedback. And I know you've been with us for a long time, so you were with us with, regular rules. These new relaxed rules are probably
Yeah.
really helping out. Tell us about that. How was your experience? I know you're running tight stop losses anyways. You're trading on, good risk foundation, so it's probably not such a huge deal for you, but it's still nice to have a little extra drawdown.
What I think is it frees up mental capital, right? If you're like constantly thinking that you're up against the edge or you're up against it, then all of a sudden you've got this extra anxiety in you that anxiety is going to compound into a different mistake later on in your process. So maybe that means that you rush your entry, or you cut your stop loss too early, or you don't leave your runner where you should. So having that extra breathing room, I think, is really fantastic. And look, trading is not a straight line. So
Sure.
if you're going to have ups and downs, you're going to have drawdown, you're going to have a little bit of opportunities to kind of, not always be hitting sort of your peak P&L. And so having an opportunity to kind of still stay funded and not lose your account balance, I think that, again, right, it's just a big selling point of we actually want the best for our traders. We don't just make money from the evaluations. And
Sure.
the more
Yeah.
of those kind of clues, right, that just creates trust. That creates reasons to want to, okay, I can have a little bit of confidence trading 100K. So let's try a 250K account, or let's try a 500K account. And you can kind of survive some of that learning curve and sizing up. And so ultimately, I think, again, it makes it more likely that you're going to pass, right? And it doesn't feel predatory. And so when you kind of stack up those things together, that generates trust, or that creates belief that, hey, I can actually do this. And then that then compounds into you making more relaxed decisions that makes you trade smoother. It makes you not feel like I have to accomplish this in 30 minutes. I can take my time doing it. And so that for me is a really big benefit. And then not to mention, right, that it's a one-stage passing process and there's no time limit. And so I think that's a big negative to a lot of firms, where you got to do 2 stages, 3 stages, but you got to make 10% in 15 days, or you can't lose X amount in this period. There's times where I'll go 3 trades in 15 days. The market doesn't care, right, how long it's been since my
Sure.
last
Yeah,
A
of
plus
course.
setup. And so I shouldn't be punished for taking on a riskier decision. And so from that perspective, I think that's a really big feature as well.
Awesome. Great feedback. Well, one question we get a lot, or I get a lot in particular, from people who are equities traders. I know you've traded regular, traditional equities in your own account to our product, which is a little bit different, but it tracks identically. Tell me a little bit about your transition from trading, outright equities to the derivative product that we trade.
Yeah, so I think it really just rewards deliberate decision making. If you're going to be doing market orders, if you're going to be kind of chasing price in that context, then you're going to see some pretty nasty slippage. You're going to start quite a bit down. So I think if you're waiting for a specific price and you can set up your orders around that, then you can kind of mitigate a lot of the sort of downside potential. But it is like anything that is a leveraged product, when you make rush decisions, then you tend to not get the best of both worlds. So trading, alternative products or derivative products, it is really powerful if you have the sort of patience to be able to execute it properly. But if you're chasing entries, or you're ignoring your risk reward requirements, or you're setting like really loose stop losses, then you kind of get punished both ways, and that can be a really frustrating experience. So it is one of those things where you have to kind of understand that this system, or the kind of prop firm model, really rewards deliberate decisions. And the more specific you can be about your entry price, about your exit target, about kind of planning out all your elements, the easier it is to kind of avoid the negative kind of side of things.
Got it. And what does that learning curve look like? So, what would you say it would take somebody who's traded, traditional stocks, large caps, to switch over to a product like this? Is it 1-to-1, or are they going to have to tighten up a little bit? What does their, kind of journey look like to get the same outcome that they've had previously in their own account?
Honestly, I think it's easier than you would imagine. I don't think there's like actually that much of a learning curve. The learning curve comes from using the platform and just understanding, hey, this is a little bit different than my interactive brokers or my Thinkorswim, and just kind of understanding, okay, here's how I set this order, here's how I do this order. If I don't set my stop loss, I'm going to get punished, right? Just kind of understanding some of those rules. So a week on a simulator, a week practicing, a week playing nominal sizing. I think that's probably all you really need if you have a confident strategy that works anyway. If you now need to start from scratch and you're kind of restarting, then the process is going to be a little bit longer. And I would say there's going to be more hiccups than just learning the platform, but just understanding where you can set kind of pending orders or limit orders, just kind of figuring those little details out is what you really need to focus on.
Awesome. Mike, that's great. You've given us a lot of great tips, particularly for somebody who's been in the trenches. You've traded both individually, you've traded institutionally, you've traded through prop. So it's great to hear the different perspectives, and that it's certainly doable. And there's a lot of guys. I'd say right now the biggest problem in prop is visibility. There's not it's not widely known that it's available. For people who do know about it, a lot of them don't know that stocks are available. So getting the word out, of course, is important. But the way you explained it is very it was very articulate and palatable. So somebody can easily transition over from one to the other. So that's a huge plus. Before I let you go, I know we're going to be wrapping up here in a few minutes. I just want to get your take on this week's economic calendar, what we saw this past week, what we look like going to next week, and maybe some trade ideas for the folks out here.
Yeah, absolutely. So for me, it still is a buy the dip market. Every time we seem to have a dip day, that gets gobbled up pretty quickly.
Sure does.
It doesn't seem like this is a market that's rewarding breakouts. You're getting a lot of fake outs. So almost, I call it like fake out insurance. Or if you can buy the right dip, you can find those sort of right reversals, a big gap down trend reversal, something along those lines. Those seem to be the most profitable trades here at the moment. From my perspective, FOMC was kind of a non-event. Everyone sort of anticipated or knew what was going to be happening anyway. They just keep passing on the burden towards
Sure.
the next meeting, and that's
Right.
probably going to be the theme for the next little bit. I think Powell doesn't want to surprise anyone, doesn't want to surprise markets. He wants to telegraph his moves as much as possible, and so we continue to have that sort of narrative. What I'm going to be curious about is, at least going forward, at least through the names that I trade, is how this AI sort of news or how these AI developments continue to impact price. Like AMD and Nvidia have been two of the crazier names to trade over the
Sure.
last 3 months or so, and to be, I mean, like, it's hard to feel like I can keep chasing the straight line up higher. But
Right.
also, I'm not getting much evidence to suggest that we've got any bearish momentum whatsoever that's slowing things down. So I want to see how that grind kind of develops, and I would love to see sort of more strength in the market besides just in the mega cap names. If I could start to see a bit more enthusiasm in mid cap land or in small cap land to kind of coincide with this sort of tech strength that we're seeing, I think that ultimately would make me feel a bit more confident that this bull market is sustainable. But for myself now, I really only have a bullish bias. I keep seeing dips being bought, so I have no reason to want to be bearish or to want to be forcing anything to the downside. I feel like that's a little bit of a counter trend trade, and it's not fun swimming uphill. Trades are
Sure.
easier when you're kind of riding the right wave. And so, yeah, just be patient, be selective, really pick your shots carefully, and wait for price to pull back into your entry zones. Don't be rushing your trades. Don't be chasing, because you're not getting rewarded for that. You're getting rewarded for buying the fake out in almost either direction. And so if you can get that as close to previous low of day, or you buy an MA cross after a big gap down or something along those lines, that's going to increase your probability a lot more. Specifically, I mean, Microsoft and Apple are at all-time highs.
Yeah, I
Maybe a little bit
know.
off of
The
them
list
now.
of recent 52-week highs today. I saw a list of it. Was just crazy.
Yeah, and so like, there's no upper resistance now. If you're a bull, you have no reason to sell. And so if we can continue to see that momentum through the summer, that would be really optimistic. It did feel a little bit from my eyes that like April and May were kind of what I normally expect July and August to be like, volume wise
Mm-hmm.
and volatility wise. So I'm curious to see if we kind of get a little bit of a rowdier summer. I'm certainly optimistic that the volatility or sort of the tradable range will be a little bit nicer in the summer. And so hopefully we can get that to kind of all sync up. But I think for now, this is still take it one day at a time, trust price and volume, and don't listen to the macro narrative right now, because it's not paying to try to short this line higher.
Right. Oh yeah, it certainly isn't. We got to, go with price action. This the doom and gloom narrative just is not playing out in the market. It's not what we're seeing at all.
No, and everyone keeps getting crushed. Every time you go short, 2 days later, you're down 50%,
Yep.
100%, whatever it is.
Yep. Exactly.
And you just pulling your hair out because, like, oh my gosh, CNBC tells me the world's on fire. So
Right.
I got to be going short and just
Mm-hmm.
ignore
Are
that
you
news.
typically a long bias trader?
Not really, but when the VIX is sub 20, when it's in its
Yeah.
14 range, and I keep
Right.
seeing dips being bought, I just have no reason to suggest that I need to be bearish right now.
Right. Cool. Awesome. Well, Michael, thank you again so much. It's been a real pleasure. I hope to have you back on very soon. You brought a huge amount of wealth and insight to us, and we really appreciate the time. And we're going to have your links all in the description here, and then we'll post it on social media as well. So, again, thank you, and I hope you have a great weekend, and trading week next week.
Yeah, sounds cool. Appreciate having me on. And yeah, hope you have a fantastic long weekend as well.
Thanks, Michael.
All right, we'll talk soon.
You got it. Bye-bye.